Start the stream.
All right.
Okay.
Well, here we are. I got to say, John was saying before we started the stream, there's not much going on today. We're not sure what we're going to be able to talk about. So we figured we'd jump on and jump into the fray. I will say that, the current Elon versus Trump versus Elon back and forth, while entertaining, it provides opportunity in the markets, whether it's with Bitcoin itself, which just bounced off of the mid 100s back up to 101, or it's Tesla stock or DJ, whatever your flavor of ice cream, there's action happening in the market. So let's go to our resident expert here, Dave Weisberger, and give us some thoughts on what's happened in the markets, Dave.
Yeah, if you're trading on this stuff, if you're selling because Trump and Elon are feuding, then I think if you're doing it because you're a trader and you see momentum and you might be able to capitalize and you were selling a little bit earlier today, watching this thing move down, okay, I guess. But if you're as an investor, if you're selling because it somehow changes your investment thesis, I really think that you need therapy. I mean, I just can't think of any other reason. If you're buying Bitcoin because of the way John and I think all of us are, because we think that the government's going to keep printing money, and because we have no end in sight of that monetary printing, and we have an administration that, whether it's Trump or Vance, if you believe that there's going to be an impeachment, are involved, both thinking that Bitcoin makes a lot of sense for both the federal government and for everybody, then I don't know what's being invalidated here. The truth is that the political sausage making in Washington is crappy. We have a Democrat Party that's voting as a bloc, unified against everything the Republicans are trying to do, and they're screaming like stuck pigs about anything being cut whatsoever. Right. And the Republicans are like, well, okay, we can cut some stuff, but there's some stuff we can't do now, but we have to try to do it later. Now, do I think it should be done later? No. But this notion that this budget is spending more, well, no, it's not. What it's doing is it's extending tax cuts that exist today, but because of accounting prestidigitation, says that the cuts are supposed to expire. And so it's, quote, exploding the deficit, because it's going to leave the current tax rates in place. And yes, there's a few things in there that one could argue probably it will explode the deficit a little bit. Things like more defense spending, which I don't personally agree with, and things like no tax on tips, etc. But this notion that it's a billionaire tax cut is just such rhetoric. It's crap. But Musk is right on one thing that he's saying, which is, listen, I've identified all this stuff, and Congress is not, the courts are basically stopping it because there's no congressional statement. So we need to get that. The question is will that happen before or after a budget? And the answer is it has to be after the budget, unfortunately, because the reconciliation process doesn't allow doing things like changing structural funding. So all of this stuff is fun, right? It's all a bunch of crap. The reality is we are going to continue to see the dollar debased. There's no way around it. A hard asset like Bitcoin will continue to do well. Bitcoin, however, is trading like a risk asset and not trading like gold, which makes very little sense in the long run, given all the tailwinds Bitcoin has. But look, that's what's happening. And as long as that's happening, people are going to trade emotionally. I mean, gold right now is up a smidge, but 3,400 is a pretty high level for gold. And I personally think that if you can buy Bitcoin at these levels, DCA in, do it using your algo, and you're going to do well. It's a great opportunity for a long-term entry, as long as you're not just chasing, on the way up. Because, maybe we see back to, the technicians will call lower, but it just doesn't feel like it.
Yeah.
So we might wake up in the 90s tomorrow morning. I don't know, but I really wouldn't care. Is the short answer.
So John, are you Team Elon, Team Trump, or Team Bitcoin? Which one are you? I want to know. You gotta pick one, my friend.
Well, I'm Team America. It doesn't give a shit about the Trump tweets or the Elon tweets or the beef that are running. They don't care. All I know is I was eating and watching them go back and forth. I got bought Bitcoin. The algos did while I was sidetracked. I guess I was trading, so that's pretty good news as far as
Well, the important thing here is that,
I think let me just say,
go ahead.
let me just say, there's a lot of immediate reactions. I saw David Freiberg say, China won today, and I've seen a lot of kind of emotional reactions. I mean, I'm always someone who is optimistic. I agree with everything that David said. The bull case for Bitcoin and these digital assets has never been better than it is today. All paths lead to the printer and deficit spending.
Yeah, John, you're having a little bit of something going on there with your connection. So if you can work on that real quick. But to John's point, John highlighted a post that happened earlier today or yesterday where Trump agreed with Elizabeth Warren, right? So Trump is finding a way to agree with Elizabeth Warren about the fact that the debt ceiling shouldn't exist anymore. Well, the debt ceiling not existing anymore is just the infinite money printer being turned on and never being turned off. That's essentially, what that is. So the reality is that, when it comes to, M2 money supply and M2 money supply associated with money printing, that they're closely tied together. It seems that M2 money supply seems to hit a new high nearly every day. And where does that put us? That puts us in a position where, Bitcoin kind of is the answer. Interesting about the whole, Trump and Elon stuff. I'll just say this. When it comes to Trump just himself, there's always a lot of noise versus signal. And you got to stay focused on signal, right? So a couple months ago, I said, tariffs, we're going to stop talking about tariffs sooner or later. And we look at markets, and markets are near all-time highs, a couple percentage points off all-time highs in the first place. So we have this, hyperbolic sort of response to anything that happens politically, and now we're watching two billionaire children fight it out as if they're passing notes back and forth, angry at each other in fifth grade. And again, this too shall pass. And the point of one of my posts today was Bitcoin doesn't know either of these guys exist, and they don't care. And so Bitcoin's going to do what it does and tick-tock another block. Tillman, your thoughts on, Bitcoin in sort of this moment, but then Bitcoin overall. We just spent time at Bitcoin Vegas. What was the conversation like? Where does the conversation go after, what was probably a historic event with Bitcoin Vegas in that city? So talk about it for me.
Well, I would just go back to kind of what Dave was talking about in terms of what's the macro environment that we find ourselves in, and the printing of dollars. A lot of people say it's a bad thing, and I do think that's probably the central rub between Elon and Trump right now. Is do we inflate this economy to infinity? And the unfortunate answer is we have to. We're an economy that's built on borrowing money for economic upside. That is what we are built on. That's where the vast majority of lending originates from is real estate development. And the land that we have becomes more valuable the larger the population that's trying to live on that land. Housing prices have seen that. But as it pertains to inflation, like you're going to see all of the goods go up in price. That's just a natural byproduct of printing more money. What's interesting to me is that I grew up under my dad's a big gold bug. He's been talking about gold for 40 years plus. as it pertains to eventually the paper gold is going to catch up with the physical, and there's going to be this epic squeeze that causes the COMEX to collapse. That's literally been being talked about for 40 years. And why do they talk about that? Why is that something that has been kind of on the tip of every gold bug's tongue for so long? Because everyone wonders how sustainable, or how they're able to keep so many plates spinning as it pertains to having, 100 pieces of paper representing the same ounce of gold. And the fact of the matter is that they have been able to. The fact of the matter is that every fiat currency in the history of mankind, no matter how strong it's been through certain periods, has failed, and failed on about a 300-year average. So does the dollar fail tomorrow? No one knows. Does the dollar fail 10 years, 100 years? How long can they keep this charade up? Well, there's a lot of military might behind that charade. There's a lot of joint partnership momentum and alliances behind that particular, U.S. dollar being the world reserve currency. And what I would say is that Bitcoin is the purest indicator of inflation globally that man has ever created, and it will continue to be that, which is going to make, gold, if you talk to any gold bug, they've been saying the price has been being artificially suppressed for decades. Well, you can't really do that for very long with Bitcoin. You can do it in the short run through, crazy stuff on Twitter and these kind of short-term knee-jerk emotional reactions. But Bitcoin, to your point, Andrew, doesn't care about any of that, doesn't see any of that. That's just the emotional fringe, either getting liquidated because they're highly leveraged and they're betting, betting the ranch every single time they go out to play. And we've seen some of those people become incredibly famous over the last 2 weeks, making $100 million bets and losing them against the price of Bitcoin short term. Well, that's just the nature of the beast. That's going to be something that's inherent to this market going forward, because you can make fortunes that way, and people are willing to take a lot of risk to make fortunes. So it's short term, like you said, noise versus long term signal, and this has nothing to do with Bitcoin. The only thing that has to do with Bitcoin is adoption, and how valuable of an indicator against global inflation does it continue to remain. By those measures, I think we're up and to the right.
Well, think of a couple of things. First, on the gold situation, it is interesting. So gold has kept pace with purchasing power parity for thousands of years, and it has continued to keep pace with purchasing power parity. There's a huge but. The but is, if you look 50 years ago, gold represented, huge percentage of monetary assets. Just did. Once the gold peg was gotten away from, gold is now well less than 10% of monetary aggregate. So it's slid significantly. It's not the denominator for the global economy anymore. But so people say, but if it's get purchasing power parity, that's okay. But the fact is, technology for basically since the Industrial Revolution started in the 1790s has been a one-way track of continuing to make things get cheaper. Food we produce faster, cheaper, more efficiently, oil, energy, everything, whether it's a computer or a piece of clothing, everything has gotten cheaper, and purchasing power parity has been maintained by gold. Well, do that math in your head and you come up with, sorry for the expression, but what the absolute fuck are we talking about? The reality is obviously gold has not maintained value. It has maintained purchasing power, and value has continued to move into fiat currency or whatever. So yeah, there's a very strong argument to say that the monetary value of gold, whatever that monetary value is, should be substantially higher if gold was to represent the whole economy. Except for there's a massive but. Someone invented this thing called Bitcoin that we all understand is now more than 15 years old, which has been eating into the monetary value of gold very steadily but small over the last few years. And the question is, should there be a monetary value of something? That something could be Bitcoin and gold, but should the composite be about 90% larger than it currently is? And if that's the case, ask yourself the question, a really simple one. Is it more likely that gold is going to double and Bitcoin is going to stay where it is, or that Bitcoin could rise by 10x and gold could rise by another 50% from this level to come to the same kind of answer. And the answer to me is the latter seems more reasonable, is more likely given global adoption trends, given the fact that Bitcoin can be used in the digital economy and be understood and underlie it. Think about what's happening with stablecoins. Look at Circle today. I mean, talk about a holy crap moment. Circle closing at more than a double from a price that was over the top of the range of where the best and the brightest thought it was worth. Where's that money coming from? Well, some of it probably came from Bitcoin ETFs. Guess what? Some of it probably came right out of crypto. But ask yourself the question, in a world where stable coins are about to be legalized and there's going to be competition from all the banks, where is the real value? Is the value in a company that does stable coins, or is the value in the asset that's ultimately going to underpin everything? And that's the Michael Saylor argument. And it's the one that I generally buy. So when I look at these short-term price fluctuations, it's fascinating. But I think that's why Bitcoin is a bit weaker today. I think Circle going up is money coming out of Bitcoin to chase it, but that's not going to chase for very long. I think at this price, it's, I hate to say it, fading IPO bumps is a pretty standard, easy way for traders to make money.
Right. It's short term, but I will say that it's going to be fun to watch crypto, Bitcoin treasuries, exchanges revive the TradFi IPO market over the next 6 to 12 months, because the IPO markets have been basically dead for 5 years. Nobody uses them. If they are using them, they're doing direct listings anyways, which are very, very different than what we know IPO markets to be, 10, 15, 30 years ago. So it's going to be interesting to watch the world of crypto and Bitcoin in particular to find its way into TradFi markets and awash in IPO cash. If anybody remembers when Coinbase went public, they made an enormous amount of acquisitions, 6 to 12 months after the fact, because they had currency. They had new currency in their hands that they can then use. Same thing will happen with or to Circle. The same thing will happen with the Geminis, the Krakens, others that go public. And then, we have the commentary and conversations about Bitcoin treasury companies. And what did they add to the larger markets? Point being is that over the next 6, 12, 18 months, the amount of capital that's going to find itself rushing into the crypto space based on both, equity as a currency we haven't seen it before. That's for sure. We simply haven't seen it before. And we're going to see what happens and how it happens. Where does the money go? The money always finds somewhere to go. But we're finding ourselves in the big boy space now. Long gone are, the meme coin, opportunities. Long gone are ICOs. Long gone are other opportunities that were a flash in the pan, but crypto Twitter couldn't stop talking about. We're now in the space where crypto companies every quarter are going to be giving presentations and going to be talking about growth. Their stock price is going to move based on that reality now. So what does that currency look like, and where does it go, and what kind of a home does it find? See, we have John Deaton back. Are you back, my friend?
Yeah, I am. I switched to the phone. Something's wrong. My laptop's not getting good service. Sorry about that.
Yeah, no problem whatsoever.
We like the Mr. Roboto voice, though. It was very, very interesting.
Yeah, it was added something. Who wants to talk about what we saw at Bitcoin Vegas, like the overall themes of what was happening there? Yes, we heard the word stable coin about 50,000 times from the stage, but words versus action. What was going on in those rooms for 3 days?
Well, I mean, look, I spent a lot of time hanging out with you guys, so I saw the same thing. I'd say that the most important observation I would have is a lot less. I mean, there was some craziness. There were some people with Vegas style outfits and whatnot, but not a lot of insanity.
Right.
A lot of relatively serious people looking at serious businesses, and a lot of investors, a lot of people who are like really interested in understanding and learning what's going on. Conversations about capital and whether or not something is good collateral, like JP Morgan said that Bitcoin will now be for them, are very different than we're gonna moon, baby. And there were no Lambos driving outside or any of that
Right.
stuff that we used to see in this stuff. I mean, it feels to me like it's an asset that is maturing, and as it hits an inflection point, we will very quickly get to a place where there's not enough supply at a 90% discount to what would simply be a normal monetary value for the world's hardest financial asset. The one thing people were talking about, the one big overhang, which, when you talk to serious people, it's not really a big overhang, but it is the one concern that everyone is, well, what about quantum? Is it going to break the hash? It's, is it going to, and seriously, I mean, that is the issue. Now, of course, there are answers and it can be fought, but it's not there yet. And that to me is interesting in and of itself. It's almost like, worrying about finding an asteroid full of gold, or the idea that the Hadron Super Collider, which could make a microscopic particle of lead into gold for a second, is going to make the gold supply go infinite. It's the same sort of idea, right? But outside of that, it's very hard for me to understand why you'd be saving your money in something else. I really don't. It sounds kind of almost irresponsible to say that, but that's how I sort of feel. And of course, John publicly declared to the Federal Election Commission that he believes that, because he told everyone in the whole world that 80% of his net worth is there. So, obviously, I'm not going to get any disagreement on that side. But it's very hard to understand unless you believe that somehow the dollars and the fiat currencies are going to win again because everyone's going to get their financial house in order, in which case, as I said before, you really need a good psychiatrist. It's hard to understand. I could see someone saying, well, going back to being a gold bug, I can understand that. At least I can understand over allocation there, but it's very hard to understand how you can't be on the side of sound money at this point.
You want to know what I realized?
Go ahead.
Yeah,
John.
you go, John.
I saw more. I had a lot more of who let the XRP attorney, and this is the coin world, and that there's going to be a moving forward, and I found that to be interesting.
Yeah, I saw you take 10,000 pictures. That's the one thing I did see. There was so many people that wanted to talk to John, and the XRP conference, quite honestly, surprised me. I mean, there was 1,200 people packed in an auditorium listening to speech after speech after speech with attentive ear. So it was quite the week. What I took away from the conference more than anything. Was this corporate adoption and what it's going to do to VC money coming back in and reinvigorating investment dollars, because it's been pretty dead, and it was not dead in 2021. It was hot and heavy. Kathy Woods was out there spending money left and right, and so was everybody else trying to chase the next big crypto Web3 integration. Now dollars are being spent, but it's really for utility, and that's the new the cycle mantra that I see is like, if you provide utility in terms of interconnectivity from TradFi to crypto, or a user base, or new geographical outreach, and kind of hub, all of those things seem to be coming to the forefront as it pertains to what people want to spend their money on. That's incredible. That is indicative of a new industry being propped up, and integration at its fabric level being pushed into the traditional finance space. I think that's really what I took away more than anything, and I do think that Bitcoin's coming to, it's sexy what Michael Saylor's doing, and even what Dave said earlier about money flowing from ETFs, or out of ETFs. think about that. That's like indicative of like the new alt season is Bitcoin equity plays.
Yeah.
That's almost like where the new, where the liquidity is flowing into these days. That's unlike anything we've seen in any cycle before. And if you kind of follow this path of Bitcoin dominance into banking integrations and everything, that I just think it's an incredible opportunity to stockpile. I don't think, like Dave and John have said, I don't think there's any way that we're here for very long in terms of price. And sure, we're seeing short-term blips, but it's just a matter of time. Corporate adoption is going to be not just a public sector type game, but the debt capabilities of having Bitcoin on your balance sheet and what type of collateral Bitcoin is to lenders versus just your economic model as a business. I think that's really going to be the distinction as it pertains to competitive advantage. If I want to invest in, a hardware store, and that hardware store is going to take 20% of its net profit and put it in Bitcoin, or I want to invest in a hardware store that doesn't, number one, hardware stores aren't that sexy from a scalability and growth perspective. It's a grinded out process. Well, what does the Bitcoin on this side do? Well, it gives me a ton of upside that I couldn't get in the hardware space otherwise. That is where I think we're headed, and I think we're going to see. Michael Saylor in his keynote speech said there's 400 million plus private businesses out there that need to add Bitcoin. Well, that's going to keep us all busy for a really, really long time.
The Bitcoin Treasury thing, no doubt, was a very, very consistent and loud, sort of share of voice, at the Bitcoin conference. And so, listen, could it turn into a bubble? Maybe. Will it take a lot of time for it to turn into a bubble? Probably. There's going to be capital that's going to chase this movement. And the reason why it's going to chase the movement is what Tillman just said. Bitcoin is collateral that is, if again, a debt deal goes wrong and you're taking control of those assets, and Bitcoin is the asset you're taking control of, you have instant ability to do all sorts of things with Bitcoin that you can't do with other assets that have historically been used as collateral, whether it's a commercial building or a piece of land or even a home. The ability to instantly liquidate for cash to cover that liability with Bitcoin is something that's significant that banks will get more and more comfortable with, or a proper institution that says we're not going to liquidate it, we're simply going to hold it because we're comfortable with the different cycles and prices we've seen with Bitcoin. That's wholly different than tying it to a commercial real estate building in Indianapolis. Very, very, very different. And so I think the money that's going to chase companies that begin to put Bitcoin on their balance sheet, we haven't even seen the meaningful beginning of that. But it's going to turn into something meaningful.
So I want to make 2 points that people haven't really talked about. So the first one is I want to expand on what Tillman was saying, because I think you are right on the pulse of it, which is you have 2 utility companies that generate retained earnings. Utility, not necessarily electrical utilities, but 2 companies that do something. They generate some retained earnings. Company 1 chooses to put it in T-bills, and investors get and pay a dividend on piece of it and whatever, and maybe company 1 also buys back some of their own stock because they think that, well, their stock is cheap. But watch, given that the market cap to GDP of our stock market is at all-time highs at over 200%, maybe that's not the best place to put it. Company 2 takes their profits, says, you know what, we're going to take our cash profits, or we're going to invest it in Bitcoin because we think that Bitcoin is undervalued relative to the dollar, and over the next 10 years, it will be a tremendous investment. Well, all of a sudden, what have you done? Well, you've given people a vehicle to buy and get exposure to Bitcoin, in an operating business at a price where you're looking at it and there's some sort of earnings yield on that business, and now you have it potentially being turbocharged. That is something that Michael Saylor's been pitching. He pitched it a few years ago to 2,400 companies, and people were like making hyperbolic predictions. Well, what if 10% of those companies started to adopt it? Oh my God, the price will go to $500,000. It's like, okay, cool. Well, right now we're at well less than 10% of those companies. And by the way, there's that was only 1/10 the companies that are in existence,
Right.
actually less than that. And so to talk about it now as if it's a bubble is beyond insane. What is a little concerning are the companies that are going to take on debt in order to buy it. But then you have to ask yourself, well, how much leverage is it? Is it 50x leverage like these nut jobs on Hyperliquid? Is it 20x leverage like a lot of people who pyramid up and get wiped out? Or is it 3 to 5 times leverage, which is a responsible amount of leverage based upon what's going on? That, it could blow up if in fact there's a major blow off bottom. If we go up and go down, whatever. But that doesn't seem incredibly likely, but it could happen. So whatever.
Well, I'm literally doing a case study right now for a client, and we are doing modeling against them investing 10% of their net profits into Bitcoin Treasury. That 10% of net profits doubles their net revenue. Their net revenue is 25%. If they had done that over the last 3 years, their net profits go from 25% to 51% with a 10% allocation. Where are you going to get that type of pop?
Yeah, it's very clear. Look, we always talk about the words and they sound very, I don't know, austere. I say asymmetric return upside to the upside, and people hear quantitative geek talking language, not caring. But what we're saying is, I believe that's why I use the words now. I think Bitcoin is trading at a 90% discount to its fair value. Now, maybe it will never achieve its fair value. That happens. It's possible. But you have to ask yourself the question, where do you get a 90% discount to fair value where you think that is, and by the way, I'm using the word fair value. I'm not saying ultimate value. Ultimate value could be much higher, right? Because of all the things that we've talked about. But I want to make one other point about the JP Morgan announcement, because people are really not connecting the dots here. So I'm going to connect some dots for you. Imagine a world where we finally get a stablecoin act, and stablecoins can now be issued and within the banking system, and you can use them to pay your bills like you pay it out of a checking account.
Right.
I don't care if they pay interest or not. Doesn't matter. Now, how long is it going to take before some company named Coinbase, Kraken, Gemini, or potentially JP Morgan, to offer a product like this? Okay, you can have a Bitcoin savings account. You can own Bitcoin in this account. And anytime you have a bill come in, we're going to do an automatic sweep where we'll liquidate your Bitcoin to sell it into dollars to cover your payments.
Yeah.
How hard is that? Given the technology we all know, I mean, if you have technology like, my old company CoinRoutes can do automated trading. Anyone could do automated trading. These are all tokenized assets. How hard is it going to be for JP Morgan to offer a Bitcoin-backed savings account tied to a real-time checking account enabled by stablecoins that will allow people to spend in Bitcoin and spend in dollars and save in Bitcoin? How hard is that? I could help. I walk into Jamie Dimon's office and sketch out the technology with maybe one or two developers for 6 months, maybe even less, to build that puppy. It would be easy, and all the crypto exchanges could offer it tomorrow if they wanted to. So think about that and think about what that means. How many people, when you make it that easy, will choose to invest a portion of their money in Bitcoin? And that's what their announcement means, because you can't do that if Bitcoin isn't good collateral for loans, because that's how you get under the covers. That's how a lot of this stuff's going to work. And so it's very important.
Hey guys, I have a question. I have a question for you. Obviously at the Bitcoin conference, the number one thing, or one of the biggest things, were these Bitcoin Treasury companies. Everybody's rushing to put Bitcoin on the balance sheet, but you're starting to see like other companies use other digital assets. I'm this company Weibus put 300 million. They filed with the SEC to put 300 million of XRP on their treasury. Do you think we're going to get copycats, the Sailor copycat, not just with Bitcoin but with other digital assets?
I'll take that first if
okay.
you want. Yeah, I think absolutely. And I think it's going to depend upon the base utility value of that cryptocurrency and what it can do in the private sector to affect change. I've been saying for a long time, I think one of the most potent use cases to be made for a coin like XRP, because it settles so quickly, so inexpensively, so scalable, that you could deploy it inside of Disney, for example, to handle 100% of their ecosystem's payments. That would be an incredible use case. And I think that we're going to see the utility of the other coins start to find its way into private sector applications. And we're going to absolutely see, when those things become those assets become underpinned with utility, then you can build on them with financial products. That's my take of it. And you see that with Bitcoin. Why are we building on Bitcoin? Why is Wall Street building on Bitcoin? Because its utility is a store of value and hedge against inflation. We've all, whether if you're a Bitcoin core developer, you may not think that way, but everybody else does in the entire world, especially the people who hold all of the world's money. So once you find your true use case, your identity, if you will, then you can start to become leveraged in the Wall Street system, to the extent that people want to participate in that utility.
Yeah, I agree with that completely. I was just going to add, first of all, Ripple Labs is an XRP treasury company. Full stop. Maybe they're selling it. They build profitable products. They'll cease selling it. In fact, the bull case for XRP is exactly that they build profitable products and they no longer need to sell any of it, and that constriction in supply will cause the price to go higher. That may be the bull case for XRP. It's certainly one of the reasons I own some of it. I would expect that. That's why I was a little bit unnerved with the idea of them buying Circle.
Will there be copycats? To Tillman's point, will there be copycats? John's point, sorry, of Bitcoin treasury companies. Resoundingly, yes, we're seeing it already. But the base thesis for that is nearly every cryptocurrency that exists currently is a copycat of Bitcoin anyways, right? So, I mean, we start with that as the thesis. We start that Bitcoin always moves the movement in some direction. And then people, jump on board and are attempting to follow suit. So I think that'll happen. How successful will they be? Again, will be associated with how successful the Bitcoin treasury companies are going to be. But the bottom line, though, is that, again, the amount of capital that's going to flow into the space is on its way to 10xing at minimum, simply because we're going to have IPOs that happen. We're going to have lending that comes into the space in a material way associated with both balance sheet and treasury companies. The treasury companies themselves, for example, Nakamoto is in the business of building up other treasury companies and facilitating Bitcoin in some way, shape, or form. So it's we're on the precipice of something here. And again, a reminder that Larry Fink's thesis of if you hold 1% to 2% in your portfolio of Bitcoin, then Bitcoin goes to 500 to 700K. Well, he maybe hasn't thought about the other movements around the edges associated with Bitcoin. Although I may take that back, he probably has thought about it, and he probably knows where we're headed, or else he would not have made a price prediction for Bitcoin, whereas he hasn't made a price prediction about anything else ever. So we're moving into a space where 2 years from now, to Dave's point, 2 years from now, the conversation around Bitcoin and crypto will be so materially different, right? There was a moment in the conference where, the governor, not the governor, but the mayor of New York City was up there talking about bit bonds, and he'd like to lead a movement associated with bit bonds. Again, the ecosystem associated with Bitcoin 2 years from now is going to follow the money. And the money currently exists in BlackRock's IBIT product, which is now at nearly $74 billion in assets under management. That will not and has not gone unnoticed on Wall Street. And so there's an opportunity for a cluster of mushrooms associated with Bitcoin and product to turn into a mushroom cloud that is doing all sorts of things associated with Wall Street and financialization of Bitcoin. It's going to happen. So 2 years from now, hopefully we'll all remember that we said it's going to be different in 2 years, because it absolutely.
Let me just chime in on one point that I disagree with you on, Andrew. All of the TradFi stuff, 100%. But as it pertains to all of the projects kind of being a knockoff of Bitcoin, I wholeheartedly disagree with that. In fact, I got into XRP because they weren't trying to be Bitcoin, because they were trying to do things with blockchain technology that applied to different use cases in my mind. Like there's this infinite, and what a good example of that is Solana. Solana, if you're a technologist and you study blockchain and you love Bitcoin for its decentralization, permissionless access, all of the proof of work, the fair and equitable distribution curve that it works off of, all of those things didn't exist with Solana, right? It was run by VCs from day one, distributed to them, in backroom deals. All of the things that we love about Bitcoin were the exact opposite in most cases to Solana. But why has Solana been successful? Because it found utility and market fit through the pump fund craze. I mean, pump fund has made $800 million. That's all on the back of Solana. Solana made the first or the best to date online casino for meme coins, and that happened to have the highest potential risk reward model of any online casino that was out there. And so I just think it's about like how does the private sector finally adopt blockchain, and which blockchain technology can be applied best to their problem set or their data set.
Yeah. So I look at the pump fund, $800 million, and all I got to do is go search for how much DraftKings made last year, and it's probably similar, right? It's no different. It's just gambling, and it's gambling with a different wrapper on it. That's really all it is.
I bet you would change your mind. I bet you're not the type of person that's played in that sandbox. The user interface is what made that special. You could create a meme coin as a 12-year-old and launch it yourself and make millions of dollars. The functionality and the utility is there. I'm just telling you point blank. Those wallets that are based on Solana are the slickest user interfaces. They are indicative of an Apple product. That's how user-friendly they are and how easy they are to use. And that's what makes it addictive, but that's also what makes it dangerous, because you're playing with big money and you're, like the Trump coin. Think about the size and scale of that meme project. And we didn't talk about the tech crashing. We didn't try to scam. Here's a perfect example of what I'm talking about. How many times do people try to pay with Bitcoin on stage and screw up? David Bailey just did it at the conference. He couldn't even do it on the conference through Lightning Network. It fumbled and they abandoned it, and he basically made a joke out of it. If you watch the pub key videos of them trying to pay, Donald Trump trying to pay for his hamburger, it messed up as well. Bitcoin's not made for paying for hamburgers. That's just not what its use case is. Guess what? Trump launched a meme coin that did $800 million of liquidity in the first 25 minutes. And that tech didn't fail. That tech was built to buy hamburgers.
Well, I tell you, Pump.fun is about to launch a token. I guess you should buy it.
Why?
Listen, trust me, in this regulatory environment, I'll be standing in line at midnight, buddy.
Could I ask a stupid question?
Yeah.
Pump.fun is a nice UI, and they built a community, etc. Came out of nowhere, but it's built on the back of Solana. Solana doesn't exist. Pump.fun doesn't exist without Solana. Solana can exist without Pump.fun. You could create a Pump.fun with one or two developers in a few weekends. Basically, it wasn't a huge amount of code is the reality. So why should Pump.fun token be worth anything. I understand the interface and the fees it's generating is great. Unless the token is equity in the marketplace, then what's the point of the token? My guess
Well, that
is
would be the
token,
only reason why I'd get in is a cut of the cash flow because I'm sure
right.
it's
If the
rich.
token, so the question
the-
about a pump.fund token is what will it give you?
Mm-hmm.
the meme coin craze is over. I mean, it's just
Well,
it's
I'm
flat
not so
out
sure about that, but
No,
mostly
that's
because
what I think.
people.
I wouldn't touch Pump.Fun with a 10-foot pole.
Let me tell you something, Andrew. I was just out getting my face bashed in the World Series of Poker. When you win 2 out of 9 coin flips that you're the aggressor in, you don't do very well playing poker. So that's why I had 2 cashes, and even on the last tournament I played, I would have been the chip leader if I won the all in that I pushed in with ace king. So so be it. But the simple fact is that everyone was saying the Canadians aren't coming, people hate us, the fields are going to be lower this year, breaking record after record. You can't imagine the sea of humanity willing to poke thousands of dollars down at poker tables right now going on at the Paris and the Horseshoe. If you think that the gambling craze and underneath meme coins is going anywhere, you just have to understand there are so many people betting so much fiat money on gambling. It's crazy. So no, it's not going anywhere.
There are rotations, and the conversation in the space where the meme coin craze was the craziest has basically disappeared.
Okay, but here's a data point for you. This morning when I was doing crypto town hall, Bitcoin was at 104-ish, around, and Fartcoin was below $1. Well, guess what? Fartcoin is above $1 right now.
Yeah.
And Bitcoin, where it is. It's at 101. These things are there, and they continue to move.
Well, you know what? I'm looking forward to the price of Fartcoin in 2 years.
I hope it's zero.
My guess is it's going to be significantly lower.
I hope it's to the moon. Listen. It's a casino. Y'all saw Vegas. It was dead. There are casinos going out of business. The measured liquidity on Pump.Fun at any given moment is $10 billion plus traded in a 24-hour window. They're the new casinos. It's no different than, sports betting stripping casinos of action. This is just another example of that. It's a much more convenient way to gamble, for sure.
I understand. I agree with Andrew in the sense that the hysteria, I think the gambling degenerates will be there, but with Hawk Tuah girl and Trump and Melania coin, I think the hysteria of the meme coin, I think that killed it. Now, there'll be another one that comes around. I don't know which celebrity will do something. It'll be tried to done a different way, and there'll be a craze here or there, but I think that I got to lean toward Andrew, and I'm looking forward. I'm not someone who participated in any of those meme coins. Some people made a lot of money. God bless them. That's all I'll say is God bless them if they made money off it.
Yeah, some people made a lot of money, but nearly everybody got their face ripped off. And at some point, that just wears on people. It just wears on people. They're not.
I would agree with you that this movie's over. I'm just saying there will be a sequel. And somebody's going to figure it out and not make it a rug pull.
I think it's going to be different. Here's the way that I think it plays out. I think it plays out on Robinhood, on Kraken, on Gemini, when all of them now have betting markets associated with elections or baseball or whatever. I think that's where that goes.
I would agree. That's a great use case. 100%.
That's actually is a really good use case.
Yeah. For sure.
Yeah, I think that's where that goes.
I'm just saying the transactional rails of Solana are valuable to online gambling. That's really what I'm saying. Is it?
Yeah, sure. I think that's I think that's a real thing. It's just a question of how it's applied, where it's applied. If again Robinhood and Coinbase and Gemini and Kraken and OKX take over, for example, betting markets. Away from, I forget what the name of the top one is right now.
DraftKings and those types.
No, it was having to do with real time, sort of the election and everything. Polymarket, isn't it? Polymarket.
Oh, Polymarket. Yeah.
So at some point, Polymarket won't have 80% of the betting markets real time, real world stuff, it'll move to different exchanges because they'll offer it as well. Robinhood, I think, is just going. They're just going to do it. I'm not even going to wait for any regulatory.
You know,
stuff.
I got to tell you, this is now I need therapy, Andrew, for you to bring up Polymarket. I'm going to let you in on a little secret that I learned recently.
Yeah.
There was going to be a significant amount of money that was going to be put down in the super PAC that was funding me, that was for me against Elizabeth Warren.
Huh?
And a billionaire looked at Polymarkets and saw that it had a 99.9% chance of losing and then said, fuck that. And he gave it to Trump. So fuck Poly.
Oh man, I'm sorry, John. I'm sorry. My
Oh
friend.
man, that's rubbing salt in the wound.
No,
there.
it is. And listen, and had he given the money, I wouldn't have won, but I'd have got the loss down to single digits.
Well, I don't know if anybody noticed, but Robinhood hit a new all-time high today. I don't know if anybody saw that, but they moved back beyond their 2021 levels and have hit brand new, fresh all-time highs about the middle of the day today. So, innovation, right? And so I moving beyond the whole meme coin deal, when you look at the rotation into the gambling space and how can I do this or how can I do that, and instant gratification, right? That the gambling market and odds makers like a Polymarket, that moving mainstream, which by the way, that is going to be mainstream. I've heard about it talked about on Compounded Friends. I don't know if Dave or John, you guys listen to that podcast, but that's one of the biggest TradFi podcasts with Josh Brown and Michael Batnick, who are really well-known RIA guys, about the most well-known RIA guys in the country. But their point was, we can think it's absurd for Robinhood to offer, Polymarket type of quote unquote investments, betting investments, but it's only a matter of time till everybody does it. Schwab offering something like that in 2, 3, 5 years because it will be ubiquitous and they have to offer it. So, where does this go? The evolution of the teardown of the 60-40 portfolio. And a guy like Jeff Park has talked about this a ton of times. There are places to go get alpha that most of us with gray beards haven't thought about. But it's coming. It's coming for us.
I would say anyone who's ever lived in England understands this better, because there's a Ladbrokes or whatever, one of them on every single street corner.
Yeah.
And so the notion of betting markets or prediction markets have been around a long time, but it is important. And what's important about Polymarket or Kalshi, let's go with Kalshi so as not to offend John, because I don't like to see my friend frown, especially because I really wish to God that he had gotten the money and been able to beat Elizabeth Warren.
Seriously.
So I kind of feel bad about that whole thing anyway, but that's besides the point. The betting markets and prediction markets and understanding the madness of crowds and crowdsourcing information is a huge trend. It is not going anywhere. It's not about DraftKings, who's going to win a football game, that's going to matter, but things that people actually care about the outcome and betting on those outcomes, particularly politics. It's a very important thing. It truly is. It becomes important. I have a friend, I haven't talked to him in years, a guy named Craig Kaplan. He did his PhD at Carnegie Mellon on crowdsourcing information and how accurate it can be. And, he has done a lot of work on this. A lot of people have. And the more ubiquitous this gets, the more you'll end up with alpha sources that you're not expecting on a variety of decisions. You'll start seeing it crop up in other ways. I don't know about that as an investment as part of a portfolio, but in terms of ability to make bets instead of, look, let's face it, the single most valuable product last year, the 2024 biggest new product was single day futures on the S&P and single day options, on the S&P.
Yeah.
Now, what's a single day option on the S&P? It's freaking gambling. That's what it is. But it's what made a lot of money for the Charles Schwabs and the Ameritrades and all the wirehouses, because it was a hugely successful product. People like to gamble, but if you can harness that gambling to create information, there are corporations who are going to be able to use it to say, okay, Start figuring out trends in terms of what the dominant fashion trend, or where you want to invest your money, what sectors, that sort of thing. It will move to, it will start to become more of input to investments than you might imagine. All of this is good, though. I don't think it really has anything to do with Bitcoin particularly, or even XRP, but it's the underlying technology, but behind all of those things is what's going to matter. And whether that's XRP or whether that's Solana or et cetera, it doesn't matter to me. I mean, that's important from an investment point of view.
So to take the opposite side of my argument on myself, I'm going to read a tweet to you guys. Richest man in the world fighting with the most powerful man in the world.
Oh, that's you talking about my friend James's tweet.
Global trade war, and then it says Coinbase with a colon, and then there's a screenshot that says Coinbase assets added to the roadmap today. Fart coin.
That's funny. Well, what I let me continue on Dave's point, because I love what he said. What he said is that when you force money into a decision, you find out a tremendous amount of data simplified down to one metric, where the free market is making its bets. And so think about sports gambling. There are an infinite number of variables that go into whether a team's going to win or lose. An infinite number. Injury, away, weather, all of these variables. But what does it get boiled down to? A line, a spread. And what is that? That's the aggregate of a lot of data points into free market economics. That is an incredible indicator at any level. So the more you can create products that people can bet on those indicators, the more money is going to flow into those types of gambles. And that's a foregone conclusion. And Web3 does it very seamlessly, very effortlessly. It will be integrated, like you said, into every single platform. And it's no different than the pink sheets. I've been playing the pink sheets since I got out of college, and it's been, very hard to do. This is going to be incredibly easy, and push button simple.
I'm on Polymarket right now. Will Elon Musk unfollow Donald Trump before the date?
That's gonna come. That's gonna come.
Will Trump meet with Elon Musk by June 30th, July 31st? It's crazy. I mean, there's a lot of degenerates in the world.
Yeah, it's crazy. Listen, guys, I promised my wife I'd be off at 6, so I'm going to have to hop. But, I love doing these shows, so I look forward to next week. Hopefully we'll have something more sane to talk about.
I'm sure we will. Maybe.
Never a dull moment. Yeah. It is to decide to go in a direction that is relatively sane. Wanted to talk about Arch Public and what our algorithms do, and it's interesting to talk about, especially here in this moment, right? Because we've got we go today from 105 and change all the way down to are we going to go under 100? So the question then becomes, if you're a trader, do you have the ability to buy when we're at 100,000 and 400, right at the very bottom of where we've been at today? No way do you have the ability to do that, because you are convinced, 1,000% convinced, we're going under 100. I'm going to pick it up in the 90s, right? That's literally what you're thinking, right? But Daniel, talk to us about and John, talk to us about what's happened in the last few hours with our Arch Public's algos and the ability to just simply be smarter and wiser than we are when it comes to the charts and comes to price movement.
Yeah, absolutely. So, I mean, as we've seen crypto Twitter take off, and you've got all the emotion and people saying sell this and buy this, they're having to count on emotion. And obviously, historically, that doesn't pay off for the majority. So in today, just as sitting here on the podcast, I've had like 5 people say, it finally triggered, it finally went off. And it's, for a lot of our clients, they're very excited coming from a DCA background, or us, let's put all of it here on this day, and then giving that control to the algorithm. It does take time and patience to get comfortable with that. So, one of our clients, he set up about 2 weeks ago. He's got a 1 hour, 4 hour, 6 hour, and a daily. And he's like, man, is this thing going to fire? I said, yes, I promise you it's going to fire, but we have to wait on that opportunity to happen. So he's excited, and I've got some other guys. I
think he was the guy that was. I mean, he's basically begging for Bitcoin to go lower because he can't wait to get it lower. I mean, that's such a sea change in mindset adjustment that you're like, please go. I want it to make sure it stays lower in the next 45 minutes. So I get the execution because I know it's going to execute when I wouldn't know how to do it. I'd be freaking out, right? It's such a difference in mindset.
Who would have ever thought that we would have an Elon Trump clash that's causing that? That's just the power in a market that's 24/7, 365. And that came out at what? 2 p.m. Eastern time. Most people are working and doing. So having that algorithm in place to say precision is case in point. I'd also had the chart pulled up for the Bitcoin conference. If we can bring that up, I'd love to walk through that. But John, so this, I was sitting at the airport before we flew out last week to Vegas, and I'm like, the thought came to my mind. I was like, hey, how would the algorithm look having started it at last year's conference up until this conference? And when I pulled the case study, I was like, wow, that's incredible. So what we're looking at here is if someone had allocated $100,000 to the algorithm and said, hey, I'm going to let it do its job. I want to accumulate Bitcoin and I want to produce cash yield. This is on a 1-day chart. And while it looks like a lot of action took place, this thing only traded 19.45% of the year. So it just really brought up to mind for me that precision beats frequency in so many ways. Yeah. But as humans, we feel like we know more in the moment. And then it's, weeks later that we're like, yeah, that sentiment probably wasn't what I should have bought for. So this 100,000, 365 days was able to accumulate 1.34 Bitcoin and produce 35,000 and change in cash yield while still having a little over $17,000 prepared to deploy at a future date. So I also ran it, pulled all the data on the same time frame and said, all right, what if I had a daily cost averaged into this and just spent 100,000 divided by 365 and put that money in each day? It accumulated about 0.1 less Bitcoin and of course, 0 cash yield because it's sitting on an exchange somewhere. It's sitting in cold storage. So this right here for me as the director of the concierge program is so powerful because a lot of people have a difficult time looking at a 4-year or even further out. So 365 days for that to occur with an asset as mature as Bitcoin makes me never want to invest in Fartcoin again because I know I'm going to actually get value. So just wanted to share that because I'm going to rerun this next year when we go to the Bitcoin conference again. And I think it may even be better.
Yeah. Fantastic. Well, I know John has experienced it, right? You've experienced it at times, going off at times you didn't expect it to. And I talk about your mindset using the algos for both, Bitcoin, XRP, associated with taking trades when you would not either have the time, the ability, or the thought process to be able to pull it off, right?
Yeah, well, the first thing I thought of you guys all last week, to be honest with you, as I was watching that guy. I think his name's James Wynn. Is that who it is?
Yeah.
James Wynn, and he's getting liquidated, and he's getting back in. He's getting liquidated, and I think I tweeted out, "Can someone introduce the Arch Public guys to this dude?" Because I was having anxiety. I can't imagine what his anxiety is, but he's living proof. To me, that was a advertisement for you guys and for what you're doing because it takes the emotion out of it. I mean, I just checked at 401. I bought Bitcoin and I bought XRP, both around that time. So I bought the dip without having to buy the dip, without having to worry about it or time the market. And it takes the emotion of, as I always say to you guys, what I was looking for was a idiot proof system. right? So I'm the idiot. Can you give me an idiot-proof system that's going to take out from me thinking, well, Bitcoin dropped here, but is this one of those days that it's going to drop so more? So maybe I shouldn't buy yet. And then it flips. And then, when it's going up, well, it's going to go up more. I know it's going to go up more, so I shouldn't sell now. And so it just takes the human emotion out of it. I think is probably one of the best things that you guys ever said to me, which was, you know, you admit you're not a good trader. You admit you're letting emotion get in the way. And so it's cool when you get these texts, not texts, but emails from from TradingView, Gemini, and at 4:01, I was immersed into the Elon versus Trump drama,
Yeah.
and was not paying attention until I saw my email pop up from TradingView and from Gemini. So you can enjoy the popcorn and enjoy the drama, and not worry about being at your computer trying to take advantage of trying to time the market. And I think that when you think of automation, it just makes perfect sense. It makes perfect sense. This whole world is becoming automated.
Sure.
Why wouldn't your trading become automated?
Bingo.
Yeah,
and I would say that the automation piece of it is what preys on other people's emotion, right? The reason why the trades have triggered is because a lot of people are emotional, and their emotion is our opportunity. Their emotion is the heartbeat of volatility. When people get highly emotional about Trump and Elon and them falling out, and they start selling Bitcoin because of that, to Daniel's point earlier, is that a good reason to sell Bitcoin? Or is that a short-term, really emotional reason to sell Bitcoin? Well, when enough people act emotionally and they sell off a lot of Bitcoin in a short period of time, guess what? That's when you should be running in the opposite direction of that emotion. And that's a hard thing to do, right? And that's what automation is. It's discipline. And it's all of the math, right? How do you measure emotion? Well, you don't just measure emotion by the price drop. You measure the emotion based upon how much volume is in that price drop. That's a hard calculation to do in the moment while you're paying attention to the Trump Elon drama, like you talked about. It's a real act of discipline and passion. And most people don't want to become professional traders. They just want to take advantage of other people's emotion. And that volatility is, like Michael Saylor says, an asset, a feature to Bitcoin, not something to be afraid of, if you have the right strategy in place. And automation allows you to keep that strategy in place without any of the hassle that typically goes along with doing that.
Well, and it's very, very difficult to buy into the face of an aggressive 1 hour red candle cascading from 103 down to 101.4, right? That is so very, very difficult to pull off as somebody sitting at your computer while it's happening, and you're like, I'm not sure if it's going to go lower, but okay, maybe. It's just very, very difficult to pull off.
And we're one tweet away from Trump and Elon saying psych.
Yeah, right.
It's possible. It's possible.
We were bored. Yeah, we were bored. It's a Tuesday, it's a Thursday. We didn't have nothing to do,
No, Trump will tweet out something like, it was unfair, all of the people that burned Teslas, we wanted to give Elon a bump in sales, so now I think if you're one of the people that hated Elon prior to this, are you rushing to the Tesla dealership today, or are you waiting to see if this thing gets resolved for a little bit longer?
They're taking off that I bought Tesla before Elon was crazy bumper stickers.
Yeah.
Exactly.
Wait a minute, I got to remove that now.
Right.
Well, fantastic time today, guys. Great conversation. So much happening in our own country, around the world, and in crypto. Just exciting stuff. Fun to be a part of. Reach out to Arch Public. Have conversations with us. Schedule a meeting. Willing to talk to you about what you want to get accomplished and how you want to get accomplished. It should be noted, it's important that our products are free to users, up to 10K annually. Again, reminder, that's annually. So you can use our product for free forever if you keep it under a certain dollar amount. We want everybody to have access to these institutional level tools and to use them and be on the same playing field as all of the big boys. So thanks for being here. Thanks for
Hey, let me
spending-
just say that Tillman was a huge hit at the XRP,
Indeed.
Vegas conference. The feedback that I got was we like that guy, and so just wanted to make you sure. I know, Tillman, I know you were an XRP holder before me, so it's like weird for me to be highlighting you, but you were a big
Well, no,
hit, brother.
listen, I couldn't appreciate more you letting me talk to the community. When I got out, the first thing I said to Andrew was, "Those are my people." And so, yeah, the feelings are mutual. I felt very honored that I got to speak to all of them, and their passion is unignorable. We had so many people that have reached out. That one guy in particular that I just really have a heart for. He's from Africa. He's wanting our trading technology to be used in Africa. And he basically was asking me, do you have a problem with the fact that everyone that I promote this to will never be a paying customer? And I literally said, if our entire company's existence was getting millions of people in Africa to have a level playing field as it relates to trading tools and algos, that would be a cause that we are all signed up for and extremely worthwhile. So we really feel that way. We want to help people. And even if you are a free user or an institutional buyer that's trying to stack $100 million of Bitcoin, you're going to get the exact same level of customer service from us. You're going to get a lot of time and attention because we have great people in this company and we want to do big things inside the community as an effort of service. So thank you so much, John. I couldn't appreciate the kind words more, and I hope we get to do it again.
Absolutely. You guys have a good one.
Appreciate
All
it,
right, guys.
See ya.
See you guys.